right? So those are quite good points which affect values of what here? Exchange rates, fluctuations in terms of exchange rates. How about this simple one? How would you ensure that you will be able to hedge against foreign exchange risk? How would you hedge against foreign exchange risk? Foreign exchange risk, hedging techniques, foreign, forward contracts, money markets, invoice with one currency, options, I like that. Do nothing is a very important one, especially whenever you have got what here, whenever you have got immaterial amounts, we have futures, etc. Very good. Thank you very much. Thank you very much. I hope you're scribbling something somewhere slowly tukiendelea. Now, who can give me 3 differences between futures and the forward contracts? Futures and forward contracts. 3, only 3 differences between futures, between futures and the forward contracts. Any 3 differences between futures and forward contracts? Futures and forward contracts, any 3? Very good. Futures are quoted in USD. In terms of a denomination, these are always quoted in USD. I like that. These ones here can be quoted in any currency. They're flexible. Any currency. That's a good one. Winnie, that's a lie. Winnie, that is a lie. Winnie, that is a lie. Winnie, that's a lie. Normally, ladies and gentlemen, what Winnie is trying to tell us here is something very interesting, that although she's putting it in the opposite way, that futures are traded in organized markets. Traded in organized markets. Traded in organized markets. Whereas forward contracts are OTC. They are OTC financial instruments. They are OTC financial instruments. OTC financial instruments. OTC financial. OTC is over the counter. Over the counter. You can walk, in this case here, to a bank, tell your bank, hey, you know what? I need to organize this cash will be coming out to organize this kind of a hedge. Let's agree. So it becomes, in this case here, over the counter. For futures, these are like shares. We have a futures market, just like we have an anaerobic stock exchange market for shares and other financial instruments like that. So this over the counter. Somebody has told me that futures have a lower risk. Lower risk. I like that. Higher risk. Lower risk. Higher risk. I like that. Great. Lower risk versus a higher risk. I like that. Why do we have a lower risk in futures market? It's because of the organized markets. And the organized markets, we must even have what we call insurance being involved. Just like how banks collapse. Just like, for example, how, if, for example, you have invested in a Uchumi supermarket and Uchumi is not able to give you any return, after some time, you'll hear the government coming and making some compensations, right? So long as the market is organized, the risk goes down. But over the counter, because these are two-party system, then one gentleman may decide in this case, not to honor their obligation. Very good, Sharon, very good. Anasema kwamba futures are standardized. Futures are standardized. Futures are standardized. They are standardized. Tunapata kama ile noti ya ngiri moja. Namna hiyo. They are standardized. These ones here, in this case here, can take up any size. Can take any size. Utapata future, forward ya 1,990,000, whatever, 0.333 can take any size. They're never what year, they're never standardized. They are never standardized. They are never standardized. They are never standardized. They are never standardized. Yep, I like how Patricia is putting it as well, that forwards are tailor-made for the currency depending on the parties involved, while futures are fixed. I can see so many. Great. Thank you very much. Thank you very much. Thank you very much. Now, I asked for 3. You guys have given me more than enough. Yes, futures are settled daily. Because of this organized market, ladies and gentlemen, because of the organized market, if I feel that I'm tired of my shares, of my futures, I'll simply look for a buyer to take. So they are settled daily. But if it's a forward contract, of course, that can only be settled at the end of the period. You guys are too good in this. You're too good in this. Thank you very much. Now, ladies and gentlemen, how about this one? How about this one? Factors that affect options. Factors affecting options or variables. Factors that affect options. Factors that affect options. When they ask you for factors that affect options, remember the formula of D1. Nakumbuka D1. D1 equals who? D1 equals ln. We have a P over E. We have forgotten the formula. You have forgotten the formula. You have forgotten the formula. P over E. I'll also not write anything if you guys are not giving me these formulas. I'll also not write anything. Plus, we have the risk-free rate, the variance over 2 multiplied by T, standard deviation root what somebody there, root T like that. Yes, so now this lady called Maimuna wanted to pay for this lesson despite the fact that I missed yesterday. That must be a very good person. Very good, very good, very good, very good, very good. Amesema, first thing is volatility. Volatility will affect valuation of what year, because volatility is standard deviation. We have time to maturity. We have time to maturity. Time to maturity. We have time to maturity. Time to maturity. We have a risk-free rate. Risk-free rate. Risk-free rate. Or simply interest rate. Or simply interest what year? Interest rate. We have the spot price. The spot price. And then of course we have the exercise what year? Exercise price. Exercise price. Exercise price. Like that. Very good. Very good. And of course, if you get a bad examiner, can I rub this? Can I rub this? Yeah, okay, okay. Okay, okay. Today you have to write. Today you have to write. You have to write like lightning, 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 lightning. You have to write very fast because as I've promised you, I don't want to stay in this room for more than 5 minutes, 5 minutes maximum. And then I'll be able to tell you what to do. I'll be able to tell you what to do. I'll be able to tell you what to do. I'll be able to tell you what to do. Finished? Thank you very much. Now I can wrap. If you get a bad examiner in terms of options, this examiner take us through breakpoint, especially while calculating WACC. While calculating WACC, I would have wanted to do that, but I've done a video for you. I've taken time to do good videos for you. That video should be able to really take you through. Should be able to take you through. Yeah, yeah. We should be able to survive. We should be able to survive. We should be able to survive. Now, ladies and gentlemen, I will not follow what you guys want me to do. I'll do what I think is important for you. Great. Now, from there, I would want somebody in this case here to differentiate between American options, and the Bermudan options. I know when I say European options, everybody knows what a European option is. American options and the Bermudan options. So in the interest of time, please try to type very fast. In the interest of time, try to type very fast, and then I'll be able to advise what we're going to do. American, my camera is not very nice. I would want a very clear shot. Very clear shot is what I want. Great. Great. Yes, American options are flexible. American options are flexible. You can exercise them anytime you wish. Just like America, they are easy. You can't even get them with a suit like this one of mine. They're easy. They're flexible. Flexible. American options are flexible. You can exercise them at any time, which is opposed to what here somebody to European options. When we talk of European options are only exercisable. European options are only exercisable at the end of the contract period. European options, you can only exercise them upon maturity. European options, you can only exercise them upon maturity. You can only exercise them upon maturity. And then Bermudan is a blend between the two. Bermudan is a blend between the two, between American and the European. Between American and the European is a blend between the two. So meaning that the Bermudan options will become rigid for some duration. If, for example, we have maturity period being 30 days, and it happens to be a Bermudan, it means that a half of this duration, which is 15, this thing will be fixed. You can't sell there. But after that, the thing changes to flexible. It becomes American. So basically, we are saying that a blended option is a combination of American and European options. A combination. It has those two characteristics. Thank you very much. Now, ladies and gentlemen, how about this? In terms of options theory, at times they could tell you to describe these words: theta, vega, rho. Theta, vega, and rho. Those three. Theta, vega, and rho. Is there anybody who has never heard of these terms? Is there anybody who has never heard of them totally? Is there anybody who has never heard of these terms totally? Is there anybody who has never heard of this term? Sure. I haven't heard of rho. Okay. Then there are many. So somebody who knows this, of course, theta, this T stands for time. So theta basically is a measure of, it's a measure of how time affects options. How time affects what here? Options. Theta. It's a measure of how time affects options. Right? Vega, V is volatility. Volatility is the same as what here somebody standard deviation. Is the same as standard deviation. So basically, vega is a measure. It's a measure of how standard deviation affects who? Affects options. Rho, this R is for the rate, the interest rate. So in this case here, we have interest rate, or risk-free rate. Risk-free rate affects who? Affects options. So I hope that is okay. I hope those are things that you can now Can I rub now very fast? I know now you guys are writing very fast, isn't it? I know you're writing very fast. I know you're writing very fast. I know you're writing very fast. Thank you. Thank you very much. 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 Great. Now we go straight away to the next. We go straight away to the next. We go straight away to the next. Next item, ladies and gentlemen, is swaps. Who can describe for us what are swaps? Who can describe for us what are swaps? Is there anybody who is typing anything? Is there anybody who is typing anything? What are swaps? What are swaps? Ladies and gentlemen, swaps basically, these are or rather financial instruments which enable us to exchange. So basically this refers to exchange of two different, or rather two obligations that are denominated in different what year? In different currencies. 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 So I've seen this happening at my workplace where I work. My workplace, we have, for example, the companies over here, they have many companies that are registered. So like now we have Arrow Middle East, a company registered in Dubai. And then of course we have Arrow US, we have Arrow Sweden. So normally what will happen is that you will get at times, in this case here, Arrow Sweden wants to make an investment, right? An investment which needs a lot of money. And those other guys on the other side may want, in this case here, a situation where they are paid, for example, if it's $1 million, but they are paid in the form of what? US dollars, right? US dollars. And perhaps they want to make, it's an independent entity from this. And perhaps they want to make this particular investment just in the US. There are different companies, they can do different things in different markets like that. So what will happen, you'll also get like US, for example, they are US here, wanting, in this case here, Swedish kronas or crowns, right? So then what they'll do, because of their advantages in their respective markets, Arrow Sweden will ask this company to borrow on its behalf. It looks for the dollars on its behalf. And then the other one borrows, because it's in Sweden, it borrows the Swedish crowns on behalf of what here? Arrow US, like that. In short, ladies and gentlemen, swaps is the exchange of two obligations that are denominated in what here? Different currencies. That is very important. And then we have also what we call interest rate swap. Interest rate swap. Interest rate swap. Interest rate swap. So this one, of course, will involve exchanging of what here? Will involve exchanging loans. They could be like two loans. Exchanging floating interest rate loans, loan obligation With who? With fixed interest rate. With fixed interest rate loan obligation. It involves exchange of floating interest rate obligation with a fixed interest rate loan obligation. So under interest rate swap, ladies and gentlemen, we have got two things we are swapping here. One thing you're supposed to be knowing at the end of the day, ladies and gentlemen, about swaps is that grass is always greener where? On the other side. Right now, all of us are looking at getting jobs in the UN. But trust you me, there must be people who are currently in the UN who are making applications out to other organizations because they believe that the UN is not their final resting place. They would want to move. So if in this case here you have, for example, somebody working for the UN, another one working for EABL, and then they agree. They say, I love EABL. The other one says, I love UN. Can we exchange? If it can happen, then that becomes a swap automatically. That becomes a swap automatically. So the same with these interest rates. Utakuta mwingine alichukua loan, 10-year loan. How about interest? Interest is 10%. Interest is 10%. Interest is 10% fixed. Fixed loan. Ikiwa fixed na maanisha hata interest rate ikiongezeka, market interest rate ikiongezeka kama sasa imeanza kuongezeka after that cap was removed. After the 14% cap was removed, right now most banks are charging up to 16, 17. And I'm so sure they will go slowly to where they used to be 20, 25, 26. Right? So ule mwana alikuwa amechukua loan ambayo ilikuwa fixed, yeye anakuwa na advantage. Na utapata huu ni party A. Utapata another party B, yeye alikuwa amechukua loan which is 10% what year? 10% floating. 10% floating. Ladies and gentlemen, as I've told you, grass is always greener where? On the other side. You'll always get this party somewhere saying, how I wish if I knew I would have taken a floating loan. And there is this guy who has a floating loan who is saying, how I wish I would have taken a fixed loan. So of course they are making their wishes in a bank. There must be an intermediary here, an intermediary called a bank. So what will happen is that the bank manager will tell this guy, instead of regretting, there is another person who came here who is admiring your loan arrangement, who wants the fixed and you want the floating. So can I call the two parties in this case here? You swap. So when we talk of swap, interest rate swap, we are looking at the two types of interest rates. We have what we call a fixed interest rate and a floating interest rate. So when you have parties exchanging the two obligations, which are having those two types of interest arrangements, then we call it an interest rate what year? An interest rate swap. That reminds me, in America, there is a club of rich people where once in a year they make arrangements to swap their spouses. They swap their spouses like for a week. Problem ni kwamba spouse anaweza kaenda akose kurudi. So we shall overcome. Now, ladies and gentlemen, how about this one here? In the money, out of money, and then at the money. Options. If you're told you to describe them, just pick whatever good language you can, even if it's one sentence, that will really help you. If you are asked here to describe in the money options, what will you tell us about in the money options? Or as we continue, please, I would want to have SGE immediately after this. The SG which I would have had at night, I would want us to clear everything so that I can release you guys to go and do what here? To go and study. What do you think of that? Or do you want us to continue studying with mwalimu mpaka jioni? Hata nataka zifuatane zote. Tumalizana, I give you a few hints here and there. Wanafunzi waanze kusoma plus the videos sasa. Wanafunzi waanze kusoma. Financial reporting. Financial reporting. Financial reporting. Financial reporting. Financial reporting. International disaster. Hiyo imepita na wakati, hata mwalimu anasikia amepata burnout. Inafaa mwalimu afanye vitu tofauti pia. Mwalimu ameban, mwalimu amebeat. Now in the money options, these are options that are just profitable. When an option, ladies and gentlemen, is profitable, we say it is what here, somebody, it is in the money. It is in the money. When an option is profitable, we say it is in the money. An out of money option is an option that is going to make losses. It's a loss-making option. It's a loss-making option. Is a loss-making option. And then, of course, at the money is basically an option that is able to break even. That is able to break even at the money, at the money, at the money, at the money. Sasa wewe saizi tunaongea saizi, ukiangalia mfuko yako uko wapi? Are you in the money? Are you out of money? Are you at the money? Ukiangalia mfuko wako unaona uko namna gani? Somebody, mfuko wako unaona uko namna gani? Mfuko wako, are you out? Huyu Nakaru anasema ukweli, tuko tu kwa sababu we are able to break even. We are able to meet our expenses at. Hata Karo amesema ukweli, at. We shall overcome. Thank you very much. So can I move to something different? Can I move to something different? Can I move to something different? Unajua, ukienda ulizwe what is an option that is in the money, huwezi ukasema tu profitable. Lazima unasema these are options that are profitable. If you exercise today, you will make a profit. Huwezi sema ati mwalimu anasema tu profitable, andika just one. Utanyoroshwa. Mimi nakupatia highlights. Ile ambayo nikiona za mwaka, nikiona mwanafunzi ameandika, nitampatia mark yote. Nakupatia highlight. So is it okay? Can I move to something different? How comes you guys are not talking? Oh. How comes you're not talking? How comes you're not talking? How comes you're not talking? Yes, thank you very much. Thank you very much. Now, ladies and gentlemen, something small here for your exams. Something small, very small indeed. Very small indeed, very small here, something very small here. Assumptions of CPFM. Assumptions of CPFM. Assumptions of CPFM. Assumptions of CPFM. So please, you can make an announcement for me, somebody who is good in making these announcements in the 2 SG platforms. In the 2 SG platforms, tell SG students to be ready at 11. SG students to be ready at 11. We're not going to meet at night. And I will welcome everybody. I'll welcome everybody in that particular class. I'll welcome everybody. You guys have been my greatest support system. You've been my greatest support system. Ya mwisho. Assumptions of CPFM. Assumptions of CPFM. Assumptions of CPFM. Assumes that investors are who? Risk averse. I like that one. Remember CPFM, ladies and gentlemen, when we talk about CPFM returns. CPFM returns equals who? CPFM returns equals who? Equals risk-free, plus we have ERM minus risk-free multiplied by beta of a security. So in this case here, beta is a measure of what here? Is a measure of risk. Beta is a measure of risk. So we are making decisions on returns with risk in mind. So meaning that CPFM assumes that all investors are what here? Risk averse. Risk averse. I like that. It assumes that the risk-free rate of return is known in advance. It assumes that the risk-free rate of return is known in advance, and will remain constant. RF, risk-free rate of return, is known in advance and will remain constant. Ladies and gentlemen, it assumes that we have a market portfolio. There is a market portfolio. There is a market portfolio whose returns, whose expected returns, whose expected returns, whose expected returns will remain what here? Will remain constant. Whose expected returns will remain constant. I like that. Whose expected returns will remain constant. Yeah, the concept of beta is known. We have already explained that under risk averse, under risk averse. I like what Rita is telling me, that the borrowing and the lending rates are the same. The borrowing and the lending rates are the same. The borrowing and lending rates are the same. Then we have, ladies and gentlemen, what this gentleman is telling us about maximization of utility. Maximization of utility. Remember, utility is what? Your satisfaction, levels of satisfaction. Remember, ladies and gentlemen, for us to be able to get market returns, if you remember the concept of indifference curves, indifference curves are used to measure satisfaction levels, which at the end of the day will be able to help us define the market portfolio. So this one of maximizing utility is the same as this point. Market portfolio, because you have to go for the market portfolio for you to be able to maximize your satisfaction levels. There are no transaction fees. No transaction fees. No transaction fees. I like this. No transaction fees. I like this. Christine has given me something very important. You guys, you are really studying. That returns are normally distributed. AFM napenda hesabu ya Mluya, napenda Waluya sana. Ile normal distribution. Returns are what here? Normally distributed. Returns are normally distributed. Thank you very much. You see, like now what Sharon is telling us about homogeneity. Homogeneity of what investors are expecting. Homogeneity. That's a very important point. Zimetosha. Hata ulizangu mingi sana. Zimetosha. Hata mimi nakwambianga mzuri Cramy formula utaweza ukajua assumptions of CPFM mingi sana. Utajua assumptions of CPFM mingi sana, zina kutosha 3-4 zimetosha. Now, ladies and gentlemen, we have this other question that they will always keep on. If I'm the one testing, if I'm the one who is given a chance to test, siwezi kosa kuuliza difference between CPFM na APM. Umeona kama hata Mimuna amesema hiyo no taxes. Hao wanafunzi ni waerevu sana. Unajua ukienda kwa hizi questions za exams za KASNEB, uulizwe assumptions of a model. Na ukue kwamba umesahau kabisa, anzanga na gani? Linearity. You see, like now this CPFM, look at how CPFM looks like. CPFM returns. CPFM returns umesema ni risk free plus ERM minus RF multiplied by what? BS. So unajua ni straight line. Unajua kwamba it's a straight line. Kwa straight line ukaanga aje? Si straight line ukaanga hivi, y equals a plus what? Y equals a plus bx. Yes. It's a straight line. Yes. Great. So nitaanza na linearity, nikuje nimwambie straight away no taxes. Hiyo ndio ni mzuri. Ukiulizwa kitu ambayo haujui assumptions zake, unaandika tu kama linearity, no taxes, no transaction fees. Hizo utashangaa utapata mark 1 ama 2. So ukienda ulizwa for example assumptions of a net income approach. Net income na uko ujui kabisa. Answer no transaction fees, no taxes, utashangaa sana. Utapata vitu mingi sana. Utapata marks mingi sana. Great. There's somebody who has given me a very important point there, like we can't really belabor writing all those points here. Imetosha. Sasa mimi nikiamua niseme, lazima niulize what is the difference between CPFM and APM? 2 differences, only 2. I don't want too many. Only 2 differences. First of all, APM inamaanisha nini ni full? 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 APM. Please, Arakisha, I feel that you guys need to start watching those videos. You need to start watching those. Arbitrage pricing model, yes. Arbitrage pricing model. Great, thank you very much. So, Na ngoja nione, asante, na ngoja differences sasa, asante, na ngoja differences kwa hamu zaidi, na ngoja differences kwa hamu zaidi. Hii ni kama wajui. Differences between CPFM. Iko mwana aliniambia siku moja ati mwalimu, difference between the two ati ni C. Moja iko na C, ingine haina C. Wini anajua Kiswahili kweli kwa hamu na. Very good. PK, CPFM is single factor, APM is multi-factor. Thank you very much. So CPFM is single factor. CPFM is single factor. APM is what here, somebody? Is multi-factor. CPFM is single factor, whereas APM is multi-factor. I like that. A multi-model, I like that. That for us to be able to use CPFM, normality. So in this case here, for us to be able to use CPFM, normality must prevail. Normality, normal distribution. Normal distribution. This fits in well with any distribution. With any distribution. Fits in well with any distribution. I like that. Hata ukileta Poisson distribution, APM ni mzuri na kula. Niongezee mbili, niongezee ingine mbili. Naona mko na point mingi, niongezee ingine mbili. Niongezee ingine mbili. Niongezee ingine mbili. Ile rahisi ni single period. Single period. Kwamba ni single period oye. Single period oye. Na hii ni multiple what here somebody? Multiple period. Single period versus what here somebody? Multiple period. Multiple period. Single period versus multiple period. Versus multiple period. Single period versus multiple period. Is there anybody who has any other type of difference? Ama zimetosha. Ama zimetosha. Ama zimetosha. You utakuwa capture point mbili at the same time. Very good. CPFM in this case here deals with systematic risk. This one here deals with systematic risk. Systematic risk, right? And this is flexible. This is flexible. It can accommodate either systematic or what here total or total risk. Tuachieni hapo sasa. Tuachieni hapo sasa jameni. CPFM assumes normal distribution. Thank you very much, Purity. Tumeongea kuhusu hiyo. So please, ukishamaliza kuandika hizi, andika tu y ndio niweze kurab. Andika y niweze kurab. Andika y niweze kurab. Andika y niweze kurab. Andika y. Thank you very much. Thank you very much. Thank you very much. Thank you very much. Great. Functions of World Bank. Functions of World Bank. Functions of IMF. Group moja ifanye functions of IMF research, group ingine ifanye research ya functions of World Bank. Anybody jina yake inaanza na D. Anybody jina yake inaanza na D, nyinyi mnafanya World Bank. Au wengine wote IMF. Anybody jina yake inaanza na D. D. World Bank. World Bank. Haya. Kwa hivyo sasa D, ndio nikiona D Dixon na advise government on monetary and physical. Please andika WB ndio utajua World Bank. Andika WB, lending of loans to member countries. Andika WB. Andika IMF lends money to member countries. IMF lends money to member countries. IMF lends money to member countries. But not just like that. Remember, the major objective of IMF is correction of balance of payments. So in this case here, they lend money to member countries that are in deficit, that are in BOP deficit, that are in balance of payment, what year deficit. Those companies or other countries, not companies, countries that are importing more than they export. Kumbukeni, how do you normally get balance of payments, my friends? To get balance of payments, what tunachukua exports minus who? Minus imports. Exports minus imports. So when I realize any organization, ladies and gentlemen, which imports more, then the BOP will be what? It will be negative. And that is why if you look at, for example, China, they have a policy that will ensure that at the end of the day, they export more because they would want always to be in a positive balance of payment. That is how you stabilize your currency. If you want to stabilize your currency, if you want to reduce your unemployment levels in your country, ensure that your balance of payment is what here is positive. So ensure that you are able to export more. Discourage importation. Like now, I don't even understand why we haven't gone to promote this young man who is making cars. Is it in Moranga? We have something, is it B50 or something as a vehicle? We need to promote these local consumers, local producers, for us to be able to create jobs here, for us to be able to stabilize what here, BJ50, I think like CPA, yes. Like CPA, yes. And now they have gotten NTSA, isn't it? Now they have gotten NTSA. We need to promote those guys. The only thing they need to do is to look at, I mean, you know, a vehicle needs to be beautiful, Yeah, maybe they need to look at the aesthetics a little bit here and there, like that. Great. So you can see Infinix here telling us that World Bank also makes loans. It's a bank. It makes loans. It gives loans to member countries for economic and social development. What year? Projects. I like what Infinix S4 is telling us, that World Bank gives loans and equity investments for economic and social development projects. So World Bank is a bank. They have to give loans. I like that. Helen anasema hizo gari za Laikipia hadi zinakaa kama za kuuza smoky. Huyu Helen ni heta haki. Huyu jamaa vile amejaribu gari na kimbia, inabeba mzigo mzito kushinda pickup. Helen ni heta. Ladies and gentlemen, anytime they ask you about these Bretton Woods institutions, remember that their first function, both of them, is advisory. Always remember that their first role is to advise governments or whoever wants to borrow from them. These guys would always want to sit in your technical committee. They'll come and, for example, tell you for us to give you money via Uhuru Kenyatta. Remember, during when Corona started, these guys reduced our, pay rates. We used to get good money from nowhere. Uhuru is a good president, but he was forced by IMF in this case to return those rates to where they used to be. And the people were able to lose significant income. So they'll come and advise you that there is a lot of money circulating in circulation. So please mop away this excess liquidity. So every time, IMF or whichever bank, always remember their advisory role and this thing of what, ladies and gentlemen, this thing of giving loans. Remember, ladies and gentlemen, for IMF also, they have another very important role. Stabilization of what here? Countries' currencies. Stabilization of countries' currencies. Stabilization of countries' currencies. Yes. Promotion of investments. Promotion of investments, yes. This is a cut across. At the World Bank would want in this case here to enable countries receive what we call foreign direct investments. Great. Hiyo imetosha nyinyi. Hiyo imetosha. Hata kuna ingine ya World Bank. Hii ya guarantor to member countries. Guarantor to member countries. Thank you very much. Thank you very much. Thank you very much. Now, ladies and gentlemen, here we are. Ladies and gentlemen, here we are. 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 Now, could you kindly discuss this in portfolio theory? In portfolio theory, total risk is misleading. Total risk is a misleading parameter. For purposes of what here? For purposes of decision making. For purposes of decision making. Total risk, remember, is standard deviation. Total risk is a misleading parameter for purposes of decision making. Discuss 3 marks. Now, remember, ladies and gentlemen, that total risk has got 2 components. Total risk has got 2 components. We have what we call systematic risk, and what here somebody, and systematic risk. We have systematic risk and systematic risk. Systematic and who? And systematic. So systematic is the one that is uniformly distributed across the board. It affects all organizations, whether you are in shoe making business, whether you are in a clothing line, etc. Systematic risk must always find you where you are. And systematic risk, you can see, is the one that is reducing. So this total risk is quite misleading. If you use total risk, ladies and gentlemen, for purposes of making decisions, then you are going to give, you are going as a consultant, you are going to misadvise your clients. Why? Remember that most investors will tend to diversify, their investments, and therefore they will not be affected. 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 They will not be affected by who? Unsystematic. They will not be affected by unsystematic risk, because when they diversify, what happens as you diversify? As your number of securities, ladies and gentlemen, as your number of securities here increase, then automatically the unsystematic risk will be wiped away. And that is why we prefer advising people using systematic risk alone. So for optimal decisions, use systematic risk, which is normally measured by what here? Measured by beta. Use systematic risk, which is measured by beta. So in short, what you're telling people out there is to use what here? It is to use CPFM. Use CPFM. In short, what you're telling people there is to use CPFM. Would you have answered this question that way? Would you have answered that question that way, ladies and gentlemen? Total risk is kiasi. Very good. Okay. So, ladies and gentlemen, tuende kwa ingine tena. Oh, sijauliza, naweza vuta. So long as umepata idea. Sitaki uende uandike kila kitu tuna cram. Hapana. Usikram utapata shida mingi sana. Don't cram. Don't cram. Don't try to cram. Don't try to cram. Don't try to cram. The other thing ambayo nimerudia sana ambayo umeona nikiongelea sana katika mergers, umeona nikiongea kuhusu vertical integration, umeona nikiongea sana kuhusu horizontal, umeona nikiongea sana kuhusu conglomerate mergers. So kiambo discuss what a vertical merger is, utasema what is a vertical merger? A vertical, same supply chain. Vertical merger is the merger of companies which are in the same supply chain. Basically, when a firm, for example, when a firm acquires its supplier, that becomes what here? A vertical merger, right? Horizontal is same industry. Two firms which are two firms in the same industry. Two firms in the same industry. For example, we have RCM, then we have Strathmore. These are very good prayer for me, by the way. So one day, for example, if we come together, and become a billionaire, right? If we come together, then this becomes what here? A horizontal merger. This becomes a horizontal merger. How about conglomerate? Conglomerate is what we call full diversification. So in this case here, we have firms in different in different industries coming together. Very good case in mind is the Manu Chandaria, right? Unampata kwa mabati rolling mills au kwa mabati au kwa mataya is all over Kalu works paka yeye mwenyewe anajipata akiwa kwa financial problems tena. Ya sababu ya gearing levels na kupenda pia hii maisha pia utaki upende vitu sana. Ati kampuni kuwe kubwa sana. Hapana. Fika kiwango fulani, wacha ikiwa too much pia kuletea too many problems. Very good. So tuendelee namna hii Sasa hii iko sawa. Si hakuna kitu ya kujaribu ku-explain zaidi. Aha. Example like which one? Example ya vertical. Maybe unipatie vertical mergers. Maybe unipatie because ile kitu ya maana wewe ujue tu kwamba vertical we have, for example, if we had like Toyota Kenya, if it was to decide to acquire, for example, Michelin tires, perhaps it has been giving them what tires, then that becomes what a vertical because they're in the same supply chain. Horizontal shapatia, Telecom na Safaricom, these guys are competitors. When competitors come together, that is a horizontal. Same industry means you are selling the same goods. Like now, KenGen and Kenya Power, because you know that KenGen gives Kenya Power electricity. If they are to come together, then that becomes a Dixon. If you are taking one for the road, that's a beer. I would have bought you 3. I know I can't buy my student beer, and I also don't take beer. I just have to find a way of making you guys happy because I know at the moment there is so much going on in your minds. How do you know Nathan? He takes. He doesn't take. He doesn't look like. Very good. Now, ladies and gentlemen, could you kindly give me advantages of mergers? Three advantages of mergers. One advantage, synergy. 1 + 1 = 3. 1 + 1 = 3. Just like in marriage, just like in marriage, once you get into marriage, you expect 1 + 1. Your work becomes lighter. In marriage, your work becomes lighter. You can't be compared. Wakati ulikuwa single, it gets lighter. So synergy. So under synergy, we are saying that the output, of course, in this case here will be what? Here will be more. The output from the combined entity will be more. Remember, once we merge, there will be quite a lot of savings. Like now, we'll not be having 2 CEOs. There will be quite so many, like systems. We used to have independent systems paying millions to service providers. But now we're going to have one system running. So there is that synergy. Thank you very much. Thank you very much. Thank you very much. Okay. Great. So, ladies and gentlemen, tax consideration, tax savings. Yes, tax savings, especially when you acquire a subsidiary that has been struggling. When you acquire a subsidiary that has been struggling, that has been the losses, you know you're going to combine the loss plus your profit. So your taxable income goes down. Taxable income goes down. In this case here, number 3, we have the concept of market penetration. Like market penetration, yes. Market penetration, like the company I work for, that's how they came to Kenya. Right? Unaangalia hii kampuni ya software ni gani iko hapo, wanakununua. Even IBM does that quite a lot. It looks at a software company, it gives you an offer. It is able to enter, for example, in the Kenyan market, where perhaps it wouldn't have managed to get customers. They get, of course, they pay a little bit higher, but they get in a system where customers are in existence. Very good, very good. So the next one, number four, ya mwisho. Si lazima tuseme mingi sana. Sio lazima tuseme mingi sana. Sio lazima tuseme mingi sana. Sio lazima tuseme mingi sana. Risk diversification, Samuel Karaoke. Samuel Karaoke, hiyo nafanya mtafutie pia kitu ya kunywa. Kuna ile uji ya Wakikuyu ile mzuri kabisa anapikia watu mashujaa. Empire building is very good. Empire building. So in this case here, for example, look at a farm like Brookside. Because of the acquisitions that Brookside is doing, every other day they have bought Moro Milk, all these companies. Now, Brookside is a giant. If you go to their offices here, you'll be surprised. It's a giant. It's an empire on its own. They're able to wake up one morning, wanasema wakulima, sisi sasa tunalipa 30 shillings. And you can't question because you are an empire. When you are an empire and go to a bank, for example, Equity Bank today, when you are an empire, big firm, go to Equity Bank today, I can assure you right away, within say 30, 40 minutes, you have 15 billion in your account right away. Hata hakuna mambo mengi ya kuongea sana, hata hakuna simu. Empire building. Tuachie namna hiyo. Naona kuna points mzuri sana. Unaona kama wamesema asset backing. Unapata kampuni kako na ma assets, lakini kwa sababu kamekuwa financially kako down, kanauzwa bei rahisi. So basically what the parent is doing is to back up their assets in a cheap way. Sababu some of those assets, when they are strapped, when they are kando namna hii, kwenda kununua hizo assets moja can be very expensive. But when you acquire a farm that is being auctioned, for example, a farm in this case here whose owners are telling you, ladies and gentlemen, just buy our shares, and then you take the entire farm, it will be cheaper for you to back up your assets that way. Tosha. Ya mwisho katika mergers and acquisitions, ningetaka mniambie ni kitu ambayo inaitwa value gap. What is a value gap in mergers and acquisitions? What is a value gap in mergers and acquisitions? What is a value gap in Mimi anasema one phone call. I don't know what she's talking about, but once you are an empire, that one phone call creates everything for you. Yes. So what is a value gap? Value gap But in the simplest terms ever, normally tukisoma kusema ukweli, tukisoma hizi answers zenu mnaandikanga saa zingine, usicomplicate maisha sana. Kama wakati walituuliza la semester concept za pastor's model, pastor Stambach model, wanafunzi waliandika kizungu, nevertheless, moreover, however, kama ujui pia saa zingine, sisemi usiandike, andika, lakini simplify your language. Simplify your language. Vile mna simplify hapa ni mzuri sana. Yes. Kama sasa huyo amesema kitu mzuri sana. Kuna mmoja amesema kitu mzuri sana. Kuna mtu amesema kitu mzuri sana. Umeona huyu Nancy anasema is the difference between expected value and the actual value of an acquiree. Difference between expected value, also called calculated value, expected value or calculated value, and the truthful value or actual value of an acquiree. That difference is what we call value gap. 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 Value gap. Because what happens, ladies and gentlemen, when you're going to buy like this targeted company, of course, you will sit down. You guys will be able to have your cash flows, you discount them, and then you say that this is the value. You go ahead and then you pay. After you pay for this subsidiary, on the ground, vitu ni tofauti. So nakuta ile actual value ulidanganywa ingine, namna hii ulidanganywa. So unapata value gap iko kubwa sana. So of course, that is one of the reasons, ladies and gentlemen, which leads to what we call breakup of mergers, failures of even marriages. And that is why the other day kama na mini proponent of marriages sana, niliwaambia namna gani, especially ladies who are here, usikawai kubali hata siku moja ati sasa mama na babako wanaambia kijana mdogo wa 27 years ati alipe dowry kama niliatea nyingine ya KC international disaster at 3 million dowry. So 3 million, ukiuliza kwa nini haki mnasema 3 million, ati msichana wetu akona masters, ati msichana wetu anafanya kazi kwa bank. So you see there is no problem. Ukijana atajikaza aenda ombe loan ama afanye whatever anafanya. Unajua kama ni mzee, niliwaambia mzee kama mimi at least naweza ngangana. Lakini sasa kijana kama usi ni loan, kidogo tena umwambie lazima afanye harusi na sasa harusi expensive. Kijana mdogo anaanza maisha ya ndoa akiwa age 27, akona loan ya milioni 6-7. Wewe niambie. So akifika msichana kwa nyumba, kijana anaanza kuangalia value gap. Ana assess, was this really thing worth? Is this thing akikata kila you na break marriages. This thing should be the normal Muslim way. Muslim wanasema ni vijana wadogo wanaanza maisha, ukiuliza Jabiri atakwambia wazazi wa msichana na marafiki zao wanachanga pesa, wanasema na kusindikiza. Mvulana pia na kusindikiza. Lakini sasa ile dawari yao inalipwa sasa gradually. Wanapozeeka unajua wanapata pesa, sasa mnarudisha mkono wapi kwa msichana pole. Lakini si watu wakianza maisha. Also the Kikuyus, I know they have very good culture here. Kikuyus also wana believe kwamba dowry hapana isha. And that is the very best thing you can ever do. Where I come from, Kisi, in international war, here somebody, international disaster. Wewe enda ukisema au unasema ati wacha dawari lipwe. Hii ni kuuzwa, hii ni mbaya. Pastor Stambach, okay. Very good. Tuendelee sasa. Very good. We shall overcome. Installments ndio mzuri. Installments, yes. Na wanaume hapo msikaseme mwalimu amesema ati mtalipa nini? Dowry. Dowry ni important kulipa. Very good. If you want to be blessed, pay dowry. Pay dowry. Lakini tafadhali pia wasichana, wazazi wa msichana hapana nyonga sisi. Hapana. Mambo yanaenda polepole, mambo yanaenda polepole. Asante sana. Asante sana. Asante sana. So, ladies and gentlemen, tuko sawa sawa. Tuko sawa sawa. You mnasema Pastor Stomberg, whatever. There is a video that I've done. There's a video which I've done earlier on. Right now, I don't want to belabor with anything. No. Sitaki tuanze kupanic saizi. Perhaps kama unajua hujaiona hiyo video, nikupatie video uone. Uone, nikupatie video. Wanauliza swali mzuri. Reasons for value gaps. Reasons for value gaps. Reasons for value gaps. Value gaps. Could you kindly give me just 2 reasons? Why do you think in this case here do we have value gaps? Or repeat, value gap. Kuuliza value gap, Patricia, it's very easy. Hata waambie hata namna hii. Value gap equals expected value minus actual value. Very good. Yeah, very good. Very good. Very good. Number 1, the first reason for value gap is dishonesty. Dishonesty. Especially from the part of who? From the part of the acquiring company directors. These guys here will engage in, those directors here will engage in, they'll engage in creative accounting. Wanakutengenezea prospectus ambayo ni fake, ambayo haina chochote. Right? Thank you very much, Samuel. Lack of what here? Due diligence. Lack of due diligence. Kwanza, on the issue of taxation. Watu mnaenda kununua makampuni, please ukienda kununua kampuni, get a very serious tax expert to go through the farm. Because later on, kwanza kampuni kizeeka zaidi, sio kama mnajua hivyo. Kampuni kiende kizeeka zaidi, makosa ya tax inakuanga 1 million. Makosa ya taxation inakuanga 1 million. Ile siku mnashikwa hivi, inakuwa ni international what ya international disaster. Inakuwa ni international disaster. So of course, dishonesty will lead to overvaluation. Yes, overvaluation. Ladies and gentlemen, number 3, the other factor that will lead to value gap, of course, in this case here is usage of what here? Usage of wrong prediction. Wrong prediction models. Usage of wrong prediction models. You don't want to involve experts. Right. Ladies and gentlemen, the one that I will be able to, yes, stock market inefficiencies as well. That I'll take very fast. Stock market inefficiencies. Stock market inefficiencies. Stock market inefficiencies. The other day I was at my club, Capital Club, at Westlands. So I try telling people that I really have a feeling that Safaricom shares are really overstated. What wakanipinga sana kwamba this is their true value. Haiwezi kuwa true value. At Safaricom itself, ukiangalia their market capitalization, its bigger than all the banks in Kenya combined. Hata ukiweka breweries inside. Kwani Safaricom iko na assets gani? Ama ni sababu ya technology? Right? So napata ile siku kitu tafanyika mbaya, not unless they keep on really working on their management, uprightness, etc. Ile kitu itafanyika siku moja watu wata lose pesa kweli kweli, because they've got really no assets, major assets which back up their share price. So stock market, what here inefficiencies that during the time when I was acquiring this particular targeted company, the stock market had placed the shares up there. So I thought the company inside, it's called signaling effect. That if the market price is good, then corporate governance in this company is good, right? It doesn't work at times that way. You know, at times in this case here, this company could trigger things. For example, they just go and borrow and pay dividends. So they pay dividends, people in the market would want the shares of the company, etc., etc., etc. Yes, KCB has tangible assets. Yeah, and of course, ladies and gentlemen, also, why in this case here, these companies also fail? Number 5, why there'll always be a value gap is poor controls. Poor controls, especially during the handover. During the handover, vitu hupotea, unakuta mtu anabeba kitu ya 100 kilograms kwa mgongo, ni kama ni 1 kilogram. There is this report that I was reading the other day that approximately 80% of Kenyans go to their workplaces every morning with an intention of stealing. Every morning. So, but we are corrupt to the core, right? So if poor controls during this handover, trust you me, like now when National Bank was being given to KCB, over that duration, unless you guys are very strong, whatever price you'll pay will be much too higher than what you'll end up getting a shell in that company. Don't play around with people out here. Don't play around with people out there. Now, the other thing, ladies and gentlemen, that I would want you guys really to always know are these things that I normally teach you every day. These one I will not even speak about them. I don't need to speak about this because I also spoke about them just the other day. If you remember, these things of sell-offs, spin-offs. We have number 3, carve-outs. Number 4, management buyout. Number 5, management buy-in. Management buy-in. These ones I should not belabor because I think we have spoken about them many times, and I'm so sure you guys have notes. You can look at them later. Is that okay? Patricia says yes. Yes. Right, those no's are many again. I think Mashaun is the one who has put it very well. Just explain briefly. So for sell-off, remember in this case here, we will create like a subsidiary within the group, and then we sell all the shares. Sell all shares to third parties to raise funds for the parent company. For spin-offs, of course, we'll create a new company, and ensure that the old shareholders, these are the parent shareholders. The old shareholders will be the same shareholders of the new company. You create a new company, just like, for example, how Telecom created Safaricom. Safaricom used to be a department, ikatolewa nje, right? But of course, Telecom, or rather the government, whatever it was left in Safaricom with is very small. That automatically will be a sell-off. For a spin-off, just like, for example, I gave you an example, ladies and gentlemen, I give you an example of M-Pesa. If Safaricom was really to feel like we are now ready to have, ladies and gentlemen, we are ready to have a new company called M-Pesa. If this created the new company called M-Pesa is given to third parties, there is no investor would want to be left in Safaricom. Safaricom will be a shell. Right? So this demerger, that is Safaricom and the M-Pesa, right? Unbundling, not demerger, it's a word demerger if they had merged earlier. This unbundling between Safaricom as a different brand and M-Pesa can only make sense if M-Pesa is spinned. Spinning, I hope you guys understand the concept of spinning. You spin, it moves round to the same owners, So it's a good way of, number one, raising more money, but for the company, but from who? From the existing shareholders. You raise more money from the existing shareholders by creating something new out of what year? The company. Of course, we'll tell them, you guys, for each share in Safaricom, depending on the proportion that you had in the old company, you'll be giving us, like, say, 3 shillings. And then you give them a span of good time. Can even be a year or 2 years. Don't again ambush them because they may not be having that money, right? And then we have a carve-out. Carve-outs, of course, here we create a sub, and sell 50% of it to third parties. So we'll have to simply carve out something small. The board is not clear on spin-off. Spin-off, what have we said? Create a new company and ensure that the old shareholders will be the same shareholders of the new company, And then we have carve-out. And a carve-out, you create a subsidiary and sell 50% to third parties. So the subsidiary that you sell, the sub that you create, you only sell 50%, actually less than 50%, you're back in a subsidiary status like that. So how about management buyout? If you're asked to define management buyout, what will you tell us about management buyout? Management buyout. What will you tell us about management buyout? What will you tell us about management buyout? Management buyout. What will you tell us about management buyout? Very good. Management buying out. So we're basically chasing the existing shareholders. Management chasing the existing shareholders by buying their shares. So I like these definitions that I'm seeing here. Like Winnie has told us, the existing managers buying shares of the company. Existing managers buying shares of who? Of the company. For a Beatrice, existing managers buying shares of the company. So basically they are buying out the existing shareholders. Oh, then it could be my internet. Are you guys able to hear me very well? Are you able to hear me very well? Are you able to see me? Okay. But I know it's because all great. So we have management by out, and then we have here management by in. So the management by in, we have managers of other companies, coming to buy shares of our company. Managers of other companies, of course, they must be having some managerial experience like directors, etc. Managers of other companies coming to buy shares of our company. So they're coming in. You buy in. So like what Chris Kirubi used to do, right? Like in Centum, they could look for troubled firms because they have got this management experience. They come in. Lisa another swali mzuri je na leveraged buyout. Leverage means what? Your debt. So meaning that these current managers, they don't have money of their own. The current managers don't have money of their own. They are going to finance their share acquisition using what here? Somebody using, they're going to finance their acquisition, share acquisition using a loan, Thank you very much. I think there is some confusion somewhere. Mbona wakisema management buy in, not management buy out. The most important thing here, if you don't want to confuse between the two, just visualize management buy-in, visualize those managers working from out there. They're coming into our farm to take over, like what Chris Kubi used to do. That's a management buy-in. But when it's a management buy-out, it is existing managers of the farm who in this case here want to buy, the organization because they believe in its future. 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 Great. For the theory of real estate, which is quite important, theory of real estate, that one will be able to listen to my videos, and you will be sorted out. You'll be sorted out. The last one, the types of foreign currency risk. 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 Tumeongea kuhusu hedging sana. Akija kinaulizwe types of foreign currency risk. Utaandika nini? If Google haraka niambie types of foreign currency risk ni gani? Unazidefine aje? Unazidefine aje? Unadefine aje? Unadefine aje? Unadefine aje? Unadefine aje? Types of foreign currency risk or exposure. You know, exposure is the same as risk. There are three, yes. Transaction, translation, and economic risk, yes. Transaction, when I'm transacting. Translating, when I'm translating financial statements of a foreign entity. And then we have economic risk. There are three. Have you been able to write them down, the three of them? Have you been able to write them down? 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 There are three. There are three. Transaction risk, remember, ladies and gentlemen, basically is the risk. Transaction risk, ladies and gentlemen, is that risk that we as exporters, we as importers, when we are handling a foreign currency, we are going to make a loss. That is a risk. And then number two, ladies and gentlemen, when we talk over translation risk, translation, of course, you are aware that if you are a group of companies with some of your subsidiaries being in other countries, at the end of the day, for purposes of having, ladies and gentlemen, these subsidiaries, which of course are reporting in what we call functional currency, right? At the end of the day, the functional currency, that country's currency that we have reported in our subsidiary has to be exchanged to our presentation currency, During that exchange, there is a risk that you could make somebody a loss. There is a risk that you could make somebody a loss. Very good student called Anne telling me that translation risk is also known as the accounting risk or financial reporting risk. It's also known as the accounting or financial reporting risk. Jacqueline, I've seen your request, but because I'm going to give you this video, I think that will be sufficient. Great. Great. So ladies and gentlemen, nataka niwafungulie tafadhali muweze kuenda kwa vitu zenu zingine, muweze kuenda kwa masomo aina ingine. Huyu mwalimu amefunza mara mingi sana, na hata kama si examiner uanga danganyi sana. 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 Can see Jabir is asking a very serious question. To assume hata itakuja. To assume itakuja. Defense mechanisms to assume hatakuja. Zilikuwa la semester. Hata si unajua hizo vitu na nini wewe. So unazijua hizo defense mechanisms. Hizo unajua. Tuwesoma kila kitu. Atuwesoma kila kitu. Hata prayer yangu by the way ni kwamba usipate 100%. Usipate 100%. Of course I would want awards. As usual I get awards. But if you go into this class, to this exam wanting 100%, itakuwa international what year? Disaster. Itakuwa international disaster. You just go there with a lot of what year? A lot of psych, of course, yes. Prayers work, yes. And between now and then, watch the videos that I'm going to give you. Right now, we are going to give you these videos. We're going to give you these videos once you watch. Another student nauliza, is this the last class? Yes. Is this the last class? Yes. Yes. It should be the